Investing is all about making money, right? Why would we bother with pesky moral considerations if our investments are giving us some good returns? But maybe you feel exactly the opposite. You feel that investing your money is all about putting your money where your values, your ethics are. In this video, I explore what is the good side and the evil side of investing and help you decide what are the ethical considerations that you might want to consider when you're making an investment decision. Let's get our angel halos and our devil pitchwork ready. My name is Greg Angelbert. I'm a life and personal finance coach. I share what I know about coaching and personal finance on a cup of coffee to help you live a life of purpose and building up your wealth. Why investing in the first place? Let's clarify first what is investing. Because the term itself might seem devoid of moral and ethical consideration, but maybe it's not. Here we are going to focus on financial investment. You can invest in many other things in your life, whether it's health, relationship, etc. Investing is to put money, effort, time, etc. into something to make a profit or get an advantage. That sounds neutral enough, right? Not entirely. It's considering making a profit as a central tenet of what making an investment is, and making a profit being something which is acceptable and desirable where you live. And that very much refers to the capitalist system where deploying capital should be giving you a return. There are economic concepts out there which actually do not take making a profit, personal wealth, as something which is a central tenet. It's actually more around distributing wealth. So there is an ethical and moral consideration in investment. And there are many other reasons why you would want to invest apart from making money. You might actually buy shares of a company you like because you like their products, or you actually want to buy the company. So that's not that easy if you want to buy the entire company. There are some key questions you can ask yourself about investment. The first one is, why do you invest in the first place? How do you want your investments to contribute to your life? Should I care about good and evil? Now let's look at good versus evil. It's a common dichotomy that we have inherited from religions, philosophies, particularly the Western ones. Good is associated with life, charity, continuity, happiness, love, or justice. Evil is associated with conscious and deliberate wrongdoing, discrimination designed to harm others, humiliation of people designed to diminish their psychological needs and dignity, destructiveness, acts of unnecessary or indiscriminate violence. Doesn't sound too pleasant. Based on those definitions, I think it would be quite safe to say that it's rare that whether you, I, anybody is really investing with the desire to be evil. After all, I do not believe that at any point I'm investing in companies where I want to actually harm anyone. But the devil is in the detail. You might invest in something, in an asset or in a company which might have some negative impact on people, but you might just not be aware of it. Good and evil in some ways reflect the system of values that we have, whether they are inherent values which are linked to all human beings, or they are your values, your personal values for yourself. The bottom line is that this creates a unique perspective that we all have when we're considering what are the ethical implications of what we do with investing. Good or evil, right or wrong is very much a personal answer. Does this video resonate with you so far? Then you know what to do, and also subscribe to the channel. Do not forget to put the notification on if you want to receive more content like this every week. Also check out other YouTube videos from YouTubers that you can find in the description. They talk about the same topic and that will give you different angles that you can explore. Good versus evil, right versus wrong, it's all about ethics. There are many different ways that you can look at ethics for investment nowadays, many different methodologies. You might also hear it called socially responsible, green, or sustainable. A basic common definition of all of this would be to invest in an asset or a company that would not do harm to someone, any people, or nature. That's still very broad, so there's been a number of attempts to just make it simpler for you and I. Some ways to invest without having too much research to do about ethics of companies or assets, etc., is to actually go for exchange traded funds, ETFs. Some of them label themselves as sustainable, socially responsible, or green. There's a couple of methodologies for these ETFs to be created. One is working through omission of companies. So for instance, you take the total amount of companies on the S&P 500 in the US, and then you start to remove the most obvious companies that you shouldn't have in an ethical. And here it's a matter of choice. It can be tobacco, it can be alcohol, weapons, etc., etc. The other method is with inclusion, which means that you define an ethical landscape that you want to have, and you only bring in your fund the companies which correspond to that landscape, to that framework. Another famous view nowadays is through ESG, which stands for environmental, social, and governance. And this is focusing on companies which are doing good on any of those elements, so they can be scored according to each of the E, S, and G. There are a number of agencies like Morningstar which are giving ratings on the different elements of ESG and that are easily available, and some of the funds are based on those ratings. Another way that you can do ethical investing is to do protest investing, which means that you are actually buying only the companies and the products that you feel are corresponding to the ethical values that you have, to what you believe in. And opposite to that is to basically not buy or to push back on any company which is actually selling products that do not correspond to your ethical standards. How about the performance of ethical funds? Due to the very diverse landscape that we just talked about ethical investing, it's very hard to give a 100% sure answer about whether ethical investing is better or worse than more traditional investing. There are some points that you might want to consider. One is that ethical investing is considered as less diversified than bog standard investing. This matters when you want to match the performance of an index. By taking ethical companies only from that index, of course, you're not going to follow all the companies in an index. So that defeats the index tracker type of strategy. On the other side, if you're investing with high conviction, which means that you want to pick specific companies which are high performers, and here you define high performance as also having ethical standards, then it doesn't matter because you are picking the companies where you have a high conviction for those companies. There are macro studies which have been made to compare the performance of ethical investing versus traditional investing. Some of those studies are showing that there is a slight advantage to traditional investing. So at the same time, there are other studies which basically say that it's exactly the same. The main reason why it would be different is that when you do ethical investment, you might be having funds which are a little bit more actively managed because they have to pick the companies. So their fee per year is a little bit more expensive than traditional ETFs. Though that is changing very fast today because there are more and more ETFs for ethical investing, which means that the difference in terms of fees is becoming very, very minimal. The other reason is that there are more and more people who are interested in ethical investing, and particularly some companies they might want to invest into, which means that those companies end up by trading at a premium just because they are more desired. Another aspect to consider with ethical companies is that you might have lower risk levels that you're taking when you're investing in them. That is because they're already looking forward to the way the world is changing and what they need to adapt to. Whether it's regulations from the government or whether it's climate change, they are working on those risks and integrating the cost already in the company. So it's very important that you consider what type of investor you are when you're considering doing some ethical investment. If you want to know more about what type of investor you are, so check out this video here and here that I've made, which will guide you through the different type of investing and the different type of motivations that we have towards investment. You know, I like the concept of personal agency. It is the ability that we have to take action. It is this ability to choose what action to take. Investing is a choice, and you can decide whether or not to have ethical considerations in it. Quite simply, you can just focus on saying that, well, the essence of investing is to make money and to make a profit. That's it. There are no other considerations. At the minimum, I would say that you should probably look at ethical investing and investing in general with regards to your life goals, knowing how they contribute to your life goals, and even deeper if it is how they contribute to your life purpose. If you want to know more about how to build your life purpose and life goal, check out this video here and here that will guide you through the steps about building a life purpose, building life goals, and how you can actually relate money to it. Having a life purpose entails knowing your values. It entails knowing what you want to see in the world, the way you want to see the world develop and change. You might believe that technology will solve all human problems in the future. Or you might believe that living a life of sustainability is the way forward. This can inform your investment decisions in a very powerful way, which is not necessarily a way that will give you the maximum return on investment. And that might not matter if it gives you a sense of peace, happiness, and purpose. Investing making an informed choice is hard because you need to have access to information, you need to know things. You also need to know yourself, which is quite hard. And then you need to act. The reward is that it is aligned with yourself, so you do not have to bother with the concept of right or wrong, good or bad, or good or evil. It's just about who you are. Because who you are is not good or evil. It is just you, living your life and sharing the same values as most human beings. I hope that this slightly philosophical dip into the ethics of investing has helped you have a better understanding of what your investment choices can be. And I will see you next week for more coaching and personal finance on a cup of coffee.